Hi, Howard Deal here with the General Agency, and today I'm with Patrick Martel with HST. They are revolutionizing healthcare, and today we'll be going over reference-based pricing. Is that right, Patrick?
That's correct. Yes.
Okay.
So I'm Patrick Martel with HST Health Savings Technology. We are in the reference-based pricing arena with a little bit different approach to how we go to market with this. We've been doing this since 2009, headquartered in Laguna Hills, California. We also have offices in Utah, Atlanta, Chicago, and then I head up the Dallas office here in Texas. Currently, we have over 800,000 members on our platform utilizing our value-based payment health plan. We're seeing an average reduction in the healthcare spend of on average 22%, being a combination between the stop loss premiums, the paid claims, as well as the administration cost. Overall number of groups we work with is over 750. We work with large groups all the way up for our union and trust business, 60,000 lives, all the way down to level funded and captive groups as well. What you're going to see, these are some great stats just on our platform, what we're seeing for the results. We are having acceptance at 140% of Medicare, 98% of the time. Average reduction off the discount of bill charges, 72.3%. And we're seeing additional savings beyond the carrier discount, ranging 20 to 30%. Since we are reimbursing these claims on a lower threshold, there is significant plan savings for the members as well. And as you can see, our ROI is 45 to 1. Really, one thing, reference-based pricing itself was started back in the market around 2004. It was a more legalistic mindset where if there was any pushback on the claims, they really did take the more legal route, go into litigation over these. There also was no prior notification when members are going in for services. It was all done after the fact. And one other big difference is the way that their fee structure was built. It's set up on a percentage of bill charges. Value-based payments is our acronym we go by, BBP, to differentiate ourselves in the marketplace. Also because we are also not only focused on a good price for the healthcare, but also good quality components on that side.
Okay,
what we do very different.
Okay,
Sorry,
so a quick question: when you mentioned here, let me make this screen a little bit bigger here. When you mentioned going to that the claims are done after the fact,
yes,
do y'all not do it after the fact, or y'all do it beforehand?
So how we do it is, thanks, Howard. Yeah, what we're doing is on any elective procedures, we're giving notification to that provider ahead of time, letting them know that our members coming in, and then we are dealing with anything that's a balanced bill on the back end. But really, with our approach, we are able to mitigate a lot of those noisy claims that would have been on the back end. Handling negotiations up front. We start our reimbursement at 140% of Medicare, which is accepted 98% of the time. For those 2% of pushback, whether that's on the front or on the back end, we negotiate between the corridor of 140 up to 200% of Medicare to go ahead and negotiate with that provider and build a more collaborative working relationship moving forward. Because the one issue really with the more legalistic reference-based pricing models is while you might win that one claim, what's going to be that working relationship with that provider moving forward? Right. Another key differentiator for us is that I am working on, yes.
So the most important thing basically is to pre-cert on these, right? So if you're going to go in for a surgery, you got to pre-cert because otherwise you're going to have to be handling the claims on the back end if they didn't pre-certify, right?
Correct. Okay. Yes. And, we are seeing that trend, especially from the big, United Healthcare, Blue Cross. They are stepping up what is required for pre-certification. So this really is kind of even more forefront, a little bit more progressive than what the BUCAs are now starting to do on their side for pre-certification.
Okay, and then on the back end, go ahead. I'm sorry, please.
No, go ahead.
Okay, on the back end, so if they have a back end claim, let's say, for example, a patient went in and they have their claim, they have claims that are coming in on the back end. And I guess those are, since a reference-based pricing, do y'all have controls that will stop the providers from basically sending them off to collection? Do y'all have like a department that handles that contacts the providers and say, hey, we're in negotiation on these bills, don't send them to collection just yet, let's negotiate these out? Or how does that work?
We do.
Okay.
Yeah, so that's going to be handled whether any claim that we're having pushback on, meaning as in there was an acceptance at 140%. What we're doing is our patient advocacy center, or what we call our PAC, is going to be the ones that are going to handle that on behalf of the member. We do not take the co-fiduciary stance. So really this is more white glove, being an advocate for the member and taking over on their behalf. Okay. So for instance, like you said on the back end, if they did get a balanced bill, all they do is contact HST. As long as their patient responsibility has been taken care of, we handle anything in excess of that, negotiating with that provider. At that time, we do let them know we are appealing the claim, and that, to be dealing with us, not sending our members off to collections. Okay. Also, if a member was to go, not check their mail, get several notices, and be sent to collections, we would still work on their behalf to let them know we're appealing the claim, help get that out of collections, and also help with any credit repair if need be.
Okay, very good. So do y'all use a network that basically just makes an easy, claims payment system? Do y'all base it off a network, or is just absolutely no network?
Oh, great question. So the traditional sense for VBP is we are replacing the facility PPO, and then we're utilizing a physician wrap network for professional and ancillary. The top ones we're usually using are PHCS or
Okay.
HealthSmart are the two largest. But yeah, the lion's share where we're making our keep is on that facility side with those big outlier claims that really can be bigger, more likely to be a spec hit.
Okay.
Also on our side, we're seeing an average reduction of 15 to 25% off the spec.
Okay.
And 5 to 15 off the aggregate. Another way we're able to achieve lower claims costs and more significant savings in a more cost plus model where it's more legalistic. I am on a fixed PEPM basis instead of a percentage of bill charges.
Okay. All right, very good. And then what type of groups are you looking for? That's the other question.
Other types of groups, we really do have a good blend across our block. Predominantly, the largest we have is more so in the blue or gray collar arena for the most part. A lot of manufacturing, retail, hotel management, energy, to name a few. Outside of that, we also do have a significant block of public sector, as well as healthcare is probably our fastest growing vertical.
Okay.
Anything from providers themselves, health systems, to skilled nursing facilities, just for a few examples.
Okay.
In terms of size of groups, we really work with anyone we don't. Yes.
Yeah, go ahead. I was going to ask, what's the group size?
There is, I'd probably say our average group size right now, if you take out the large outliers, is right around 500 lives. But really anything that is on a self-funded type chassis, we can work with.
Okay. So what's the smallest group you can take?
It's more so on the up to the carriers that we're looking at. We do work with the Pareto captive. So I have groups as small as 5 lives.
Okay. And then when you're mentioning spec and ag, is that do y'all have spec and ags built onto your policies? And how small of a policy can get a spec deductible?
We have some policies that are just aggregate. Really not. We're more so just a component of the stop loss. Okay. That's just kind of what we're seeing in an average reduction in the premiums.
Okay. I see.
The spec in aggregate.
I see. Okay.
This slide just kind of shows you this is more of a long-term play here. Really, in terms of looking at reference-based pricing, we're currently, following Medicare. We're trending at 1.8% compared to what you're looking nationally at self-insured, running at 5.1%, and fully insured 8.2%. Just really kind of shows how your clients can really achieve a more sustainable healthcare spend on a yearly basis. We also include this in our savings analysis for clients, and that's based off their actual paid claims to give them a better idea long term what they'll be spending year to year, utilizing a reference-based pricing or value-based payments model.
Okay.
Let's see here. Okay. This is just really showing you who all is involved in this process. It can be quite cumbersome sometimes to unbundle everything. But by unbundling everything, you really are getting a better control on those claims costs and managing those components a lot better. From what our side, what we're doing is we are not a TPA. We are just the watchdog for these claims and providing the balance bill support. Some other great things that we're doing is we do have a consumer-facing app called HST Connect. It does a lot of great things in terms of housing all of their health plan information, contacts for who they need to call if they do get a balance bill, or they can even upload it through the app. But the best part about it is they can actually go in and pre-price a procedure since this is an open access plan. So they were looking at a knee replacement, for example, in the DFW area. On the low end, it'll show the low cost of $35,000. On the high end, $250,000. So you can even go in by facility who's more likely to accept versus who might be giving us some pushback. It'll show the quality components. So how many procedures have they done, what the average length of stay is, and then they're expected out of pocket. We do also have several employer contracts, what we consider safe harbor, meaning as in that members can go in with no risk of being balanced billing. We've already negotiated the contract up front. Gotcha. Some of the largest that we have are in yep.
No, go ahead. Go ahead.
Oh, some of the largest that we do have are in California with Adventist Health. In Chicago, we work with Advocate Health. And then in Michigan, it's Beaumont Hospital System. They are very good in terms of high quality, big reach. They are the largest, within their region. So really, this just creates, one of the biggest concerns about reference-based pricing is the risk of balanced billing, not knowing if you are going to have a large claimant that could be noisy. So this just really does help lessen that risk and creates more steerage on our end to steer members into those friendly facilities that we know are going to accept and not give us much pushback.
Gotcha.
But and also our Pathfinder tool is the resource our TPAs are using for those elective procedures, giving notification to that provider ahead of time on that end. We are also, in terms of our partners, we have over 12 preferred stop loss or MGU partners who really do understand how to price this plan appropriately year one. We are agnostic in terms of the PBM, so that's really wherever you want to put that. As we mentioned earlier, we are using, for the majority of our groups, a physician-only PPO network for the day-to-day claims, just to make sure that they do have more access to that, less pushback on the physician side. We do also have a list of preferred TPAs, that really do understand how to administer RBP.
Okay.
Not only that, part of our success with this plan is we are paying very quickly post-claim. So we average between 7 to 10 days for payment. So we look for TPA partners who can accommodate this as well. Gotcha. In terms of the care management, we do have some good partners on that side for the front end, really working on, the outreach, identifying any high claimants, and then anything over really 1,000 lives, we can start looking at a dual option platform, meaning as in you can still have your Aetna PPO next to HST. For those type of arrangements or strategies, we really do encourage using a concierge service on the front end to have one point of contact for members and really lessen that noise.
Okay. There we go.
Okay. In terms of HST, we are leading in the space of innovation, always looking to make sure we're staying ahead of the curve. We were first to market with a proactive approach, and these are some other great tools that we've created along the process to really help things move even more smoothly. In terms of a provider lookup, where our channel partners can look up and help direct members to friendly facilities. We do also have our VBP acceptance rates showing very detailed the percentage of acceptance at 140% of Medicare. We already spoke about HST Connect, the app. We do also now have our provider Quick Pay. where if there is any pushback at time of service, we can actually go ahead and pay for the service right there and using a digital credit card on behalf of the employer group to make sure that no members are being turned away for any type of procedures. That really comes more into play, though, on the physician side. We do have groups that go full replacement, getting rid of all the PPO, and it really is more so an education factor for the physicians. So that's when that provider quick pay comes into play more often. Very similar to what you consider cash pay on that side.
Okay.
Let's see. This just really, in terms of when you really run into issues on this, for it not working with clients, it's really when there's not a good strategy put in place for the members' re-education. Because while this is a very similar plan to PPO, there are some changes, and it does involve some more member involvement in terms of their healthcare. So this just kind of gives you an idea of that member experience, walking them through a procedure. So if they are going in, I like to use the example of a knee replacement. Going in, their knee hurts. They see their doctor and get a recommendation for surgery. That's when that pre-certification process is going to start. It's all done behind the scenes, unbeknownst to the member. And what we are giving them now is another arrow in their quiver with our Connect app, where they can actually go in there and decide for themselves where they want to go in for their procedure. But if they did not want to use the app, it would just work very similar to PPO. It gets deemed medically necessary. That's when we're reaching out at that time to the provider, sending out our letter, letting them know about the expected reimbursement. And, we're going to pay within 7 to 10 days. Member goes in for the service. Then that provider is going to go ahead and send a bill over to TPA, who shoots it over to HST. HST then unbundles that claim, auditing it, making sure it's all coded correctly. We reprice that 140% of Medicare. And then we're going to go ahead and push that over to the TPA, who's going to pay the provider. That's when the EOB gets issued to the member. And 98% of the time, we're done from there. Member just pays their deductible and co-insurance, and they're going to contact our patient advocacy center if they do receive a balance bill.
Okay.
Let's go ahead and go.
Very good.
And on that, all right. Our patient advocacy center, they are going to work on behalf of the member to help make sure we're protecting and guiding them, answering any questions that they may have, and working with that provider to negotiate the balance bill on their behalf. They get updates every 10 business days on the status of their claim. They can communicate with us by text, email, or phone on that side. And then we are getting resolution on these balance bills in under 60 days. Once we do get resolution, they're going to get a confirmation of that, and we are going to send an updated EOB to the member.
Okay, very good.
Any questions?
No, I'm doing good so far.
Okay, great. So really, 98% of the time, like I said, this works in terms of the acceptance at 140. But what's really happening with that 2% of pushback, whether that's on the front or back end? So this just kind of gives you an idea of what's occurring. I like to use the example of if we're looking at 1,000 claims, we're going to expect 20 of those to have pushback. Here's what's going on within those 20% of claims. 34% of the time, they're accepting at 140. It's more so an education factor about how our health plan works. 25% of the time on the back end with a balance bill, we're negotiating between 140 to 200% of Medicare to go ahead and get resolution on that. Now, 18% of the time, the plan is appealing to us prior to the procedure for additional payments. So we're faxing out that notification ahead of time. It's when they're coming back to us looking for additional funds, which we still negotiate like we would on the back end between 140 and 200% of Medicare.
Okay.
Now, 13% of the time, that provider is exhausting their rights, meaning as when we're appealing it, the balance bill, but they've gone non-responsive on us past 180 days, essentially agreeing to write off the bill as bad debt. Okay. And then 9% of the time, we are negotiating above 200% of Medicare.
Okay.
What occurs then is we're actually going to reach out to the stop loss carrier for sign off, as well as the group to see where they want to pay that claim that is above 200%. Okay. If that was, if they didn't want to go above 200, we would handle over to legal, who would go to legal settlement in terms of trying to work out something below 200% of Medicare.
Okay.
Now, yes.
No, go ahead. Go ahead.
Okay, and then 1% of the time results in that legal settlement. Member not aware they had balance bill support. They paid it themselves out of habit. And then we resubmitted the claim back to the carrier because it was just coded incorrectly.
Gotcha. Okay.
All right. But, as I mentioned, we do work with over 750 employer groups. It is a more collaborative and proactive model compared to the more legalistic approach. Working with over 800,000 members. And something I'm very proud of is that our retention rate on a 2-year look back is over 95%. This product, if it is implemented correctly, and we do have a good strategy for education of the members, this does work very well, and it is a very sticky product. And that is something I'm very proud of. In terms of different groups we're working with, just kind of recapping, we do work with a lot of blue and gray collar on that side, a lot of energy, manufacturing, hotel management for a few examples. We're also very heavy in the healthcare space as well as public sector. But really, this is a good fit for any group that is looking to just more so wants to control their healthcare spend, especially if they are having yo-yo years where it's going up and down. They want something more predictable. This is a really good fit for them. What we're doing in terms of seeing if this would be a good fit for any of your clients, usually pre-renewal, what we are doing is if I just get some basic information in terms of paid claims, some census and scheduled benefits information, we use the Windsor actuarial software to go ahead and churn out a savings analysis showing what we would have saved on their paid claims last year for just to give them a better idea, as well as the member impact.
Okay.
And then that 5-year trend graph that we showed you earlier. So along with that, if I do have their top utilization or a certain area in mind, I can provide our hospital experience report. What that's going to do is show you who's a friendly, in terms of friendly providers not giving us much pushback.
Right.
Also, in the different regions, along with the acceptance rate at 140% of Medicare. So we want to make sure that they go in this eyes wide open, knowing what to expect, who's going to be giving us pushback, and if this would be a good fit for them. At that time, if they do want to keep pursuing this, and if we are going to RFP looking at reference-based pricing options, we'll go ahead and get them linked up with our preferred TPAs, securing ASO proposals, as well as we can help with going to market to our preferred carriers if need be. At that time, if they do want to move forward with this, we do try to look for as much lead time as possible to make sure we have a successful implementation.
Right.
Ideally, we're looking for 2 months, but we are flexible, and we will, we can make accommodations on that if need be. In terms of education information for the employees, we've got 3 great videos. They're cartoons, 2 minutes in length, explaining who's HST, what you do if you get a balance bill, and then one that's going to cover our app. So that really is something that we can send out on an ongoing drip campaign just to remind members. And of course, we have all your traditional communications from emails, posters, print campaigns as well.
Okay. So from my broker, so let's say I have a broker and he's got a 40 life group. Okay. So
Okay.
And they're coming up for renewal. What is basically what are the pieces involved? So they're going to send you claims information if they have it. If there's you're going to take a look at the claims information, say, okay, here's the high claims, here's here's what we got for the loss ratio. You're going to run it through your software and come back and say, hey, we could have saved you another 20% off this. Is that right? That was
correct. Yes, sir.
Okay. So, and then from there, they say, okay, well, how do we attach the HST platform? They'll send you, I guess, the information, and then you're going to send it out to your preferred TPAs to attach the reinsurance, or is it a straight ASO?
We can do either. They can either assist with the reinsurance or just provide the ASO.
Okay.
Proposal.
And so on the reinsurance side, y'all do, is it a true self-funded plan, or can you do a level funding also?
We can do.
You can do both.
Both. Okay. Yes.
All right.
As well as captives, if they want to go into a captive like Pareto.
Sure. Okay. All right. Very good. I was trying to figure out all the pieces. So basically, your piece is the the claims process, and then once you go to the TPAs, you'll assign an insurance company to it. Is that what I'm hearing?
Correct.
Okay.
Yes,
All
sir.
right, gotcha. Very good. Okay. I'm sorry. And then go ahead with your slide there. There you go.
No, you're good. And that just kind of wraps it up for me. On that side, are there any other kind of questions I can help answer? Or
no, just we probably need I guess just whenever we get to groups, we just need to have the loss ratios. Is that right? We do need to have the claims experience.
Yes, we do. Okay. Yeah, right. Whatever you need for a typical RFP.
Okay.
And just our loss ratio right now is running at 57%.
Oh, okay, very good. So I could actually pull stuff off of a fully insured plan, somebody off of fully insured, as long as I get the claims data and send it over to you. And then basically what we'll do is we'll kind of see if we can go like a level funded route from there. And,
yes, sir.
Yeah, okay. And then we can go down. So that basically what this is going to do on your platform, you're just going to add, I guess if we go through one of your preferred TPAs, it's all going to be bundled together, correct? So in other words, the employer is only going to pay the one premium.
Yes, exactly.
They're not going to pay HST and then maybe Allied. If that, I don't know, I was just pulling somebody out of the air.
No, yeah, it's all paid through. Whoever. Yeah, we get paid through the TPA.
Okay, and now if we do have some TPAs that we're working with, can we attach this product to their product? Let me ask you that.
We can. We just have to vet them out. We do have some requirements for our TPAs.
Okay.
In terms of monthly minimums, and we have to get them installed. So it does take about 2 months to install a TPA. Are there any that you're currently working with that you think do a good job?
Yeah, I have a few. that do a really good job. So, and I have some that I've worked with for years too. So if we can, get that managed out, that'd be good.
Okay.
Yeah. So, all right, very good. I guess we kind of you met your 2:00 deadline, so I think we're good to go there.
All right. Anyway, yeah, and if you want, if there's any other questions or if you want to run through it again, just let me know.
Okay.
If it didn't turn out okay, just let me know. I'd be happy to.
Yeah. Well, so far it looks like it went fine. I'll send you a copy. What's that?
Okay. How are you working with other brokers as well? Are you kind of like a general agency as well?
I am a general agent. Yeah. I only have external brokers. I don't have anybody internal.
Oh, okay.
So,
okay.
Yeah. So my brokers will come to me for products. And like I said, I deal with a lot of new brokers. So brokers that are, struggling in the business, trying to get a foothold of it. It's kind of hard for a broker that just, a couple of years into it and they're going up against somebody with 25 years of experience. So they call me, I help them out. You know what I mean? Because newer brokers, they struggle like that. So I'm basically their back end, and I do a lot of with the hand holding of the new brokers. So we kind of make sure we get their groups installed. Well, we help with claims and billing and you name it. We help the new broker doesn't have to hire anybody. They can just use us because we basically is all their back end support. And I do their sales also.
So more turnkey for them, huh?
What's that?
Wow. I said you're just more turnkey. You're like plug and play for them.
Plug and play. That's a good analogy. Right
yeah, there. That's great. And then I do have a lot of brokers prospecting with this.
Okay.
We've even taken some groups from Locked In, bloody their nose because the producer didn't believe in this strategy.
Right.
And I think more now than ever, we're going to see a lot of changes to budget, and they're going to be looking for more creative solutions. Right. So and really. This isn't a new solution, but really our approach does seem to work better with some groups who don't really want to take that legalistic approach.
Right. Gotcha. All right. Very good. Well, I appreciate it, Patrick. Thanks for your time. We'll talk again soon.
All right. I'll send you some follow-up information as well.
Oh, that'd be perfect. All right. Okay. Appreciate it.
Thank you.
Right, thanks. Have a good day. For more information on this and other group health products, remember to subscribe to our channel or give us a call at the General Agency at 972-466-2915.